Well, it could be right out of a Saturday Night Live skit. President Trump and Federal Reserve Chairman Jay Powell viewing the Fed buildings clashing on camera during the president's tour of the Federal Reserve's renovation site. Look at this. The president calling out massive cost overruns while he was with Powell, giving him a piece of paper to explain to him that now it looks like the cost is up to $3.1 billion, which Powell is refuting. Watch this.
We're taking a look, and it looks like it's about $3.1 billion. It went up a little bit, or a lot. So the 2.7 is now 3.1.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Our notes had it about 3.1 as well.
3.1.
3.2.
This came from us?
Yes. I don't know who does that.
You're including the Martin renovation. You just added
our entire capital.
Yeah, you just added in a third building. Is what that is. That's a third building.
Well, no, but it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
It's part of the overall work.
This is definitely going to be an SNL skit. There's no doubt in my mind. Joining me now is Hayman Capital Management founder and chief investment officer Kyle Bass. Kyle, I can't stop watching that video. Your reaction?
I mean, Maria, as you know, it's not good to show a rift between the president and the chair of the Fed. You know, whether a building has cost overruns or not, when we look at the size of our economy, we're talking about $30 trillion economy. I realize we're talking about a building with a couple of $1 billion, and I realize that's expensive. But you know, we need to get we are the world's central bank, given the fact that our economy is about 26% of the world's GDP. We just need to get the Fed settled. And look, when you look at rates, Maria, the most recent inflation numbers are we're running at about 2.4% annually and slowing down. And if you look at import prices, the naysayers that said Trump's tariffs are going to cause rapid inflation in consumer goods didn't show up. And so in the end, Treasury Secretary Bessent and President Trump were right about the tariffs not basically making their way into consumer prices. When you get to the Fed, if we're running a 2.4% inflation number, why are short rates at 4.3%? So in the end, I think you're going to see the Fed cutting rates.
So you think the Fed will cut? I mean, they've got a meeting next week. The odds are against it next week. You think they'll cut in September then, Kyle?
Yeah, I mean, I still think we get 2 cuts this year. I do think that, look, Maria, we could easily have rates 100 basis points lower right now at roughly 3.30 effective, with inflation running 2.4. They should actually be lower than that. So at some point in time, you're going to see the Fed lower rates. And again, whether people believe it or not, that the Fed is apolitical, you got to realize Powell did cut 50 basis points going into the election. And in the Fed's 111-year history, do you know how many times the Fed has acted just before an election? Only once, and it was only this one. So I think it's important for us to see exactly, I guess, for the rate cuts for what they are. They're being resisted now. They were given before, and the Fed shouldn't politicize itself, and unfortunately, it has.
Yeah, you're right, and that's a great point. I mean, look, you don't want to have a rift between the chairman of the Fed and the president of the United States, but it sure feels like there's been some politics here with Chairman Powell cutting rates right before an election. But I want to move on because I'm so happy to have you today. I want to ask you about China and some other things because the Treasury Secretary, Scott Bessent, is headed to Stockholm next week. He'll meet with his Chinese counterparts, officials, to discuss trade and export controls. Bessent told us here on this program this week that he's going to be pushing to extend President Trump's August 12th deadline for the reciprocal tariffs to return. But of course, this is in the face of the U.S. approving to resume NVIDIA's H20 chip sales to China, part of a broader deal which eased the export controls in exchange for China to send rare earth minerals to the United States. Now, Kyle, you know that China has not done this easily. Right? I mean, first they weren't sending the rare earth minerals. They knew we needed them. They stopped sending them. And then they started giving the companies that needed them a hard time, saying we want information, what you're using these for. We want data. And so now this is the back and forth that we're sending them the chips, the H20 NVIDIA chips, and they're sending us rare earth minerals. Is this a good deal, Kyle? What do you think?
You know, it isn't a good deal, Maria. The way you have to think about this deal is it's a hostage exchange, right? They desperately need our chips. Their chip production, their chip capacity is nowhere near what NVIDIA's are as a chip performance. The H20 chips, Jensen Huang likes to say they're just a degraded version of the H100. That's not exactly true. They're, there are two things that you measure AI chips with. One is compute, the other is inference. The H20 chips are the world's best inference chips, are amongst them. And what that means is when you ask AI to think, that's the inference timing and process that goes on there. So they're 20% faster than the H100s, and they're 100% faster than China's best AI chip at Huawei, the Ascend 91. So, Maria, we are giving them the chip that they're going to run and put into their military modernization, into their combat systems, into their autonomous systems, and those systems are all aimed at us, the U.S. and our allies. So we give them their chips, they give us these rare earth magnets, and these rare earth magnets that run EVs, electric vehicles, Ford being the primary recipient there. And in exchange, what we had to give them is a licensing agreement. We have to tell them how many vehicles we're putting them in, what the sales numbers are, and what the margins are for each vehicle. Our chips go into the Chinese People's Liberation Army ether. Whatever they want to do with them, they can do with them. So when you think about this deal, it's a hostage exchange with the U.S.'s #1 enemy, which is, again, it's an interesting thought. We're both preparing for war, and neither of us are truly ready yet. And so we do deals like this. And Besson's trip to Stockholm, it's been publicly said, and he said that we're looking towards a more stable, managed relationship with our enemy, or with China. He didn't say our enemy. Those are my words.
But it is.
But realistically, what he's going to do is talk to China about buying 2 million barrels of oil a day from Iran. China gives Iran $120 million a day. And that's got to stop. We've primarily sanctioned Iran. So we are threatening 100% retaliatory tariffs on China unless they stop buying oil from the world's #1 state sponsor of terror.
Unbelievable. I mean, I don't know why we continue to underwrite the enemy. I did several specials on this for Fox Nation, which you joined me on, underwriting the enemy. Now we've got HSBC disbanding its U.S. business banking division. It claims it's going to focus on core markets like Hong Kong, the UK, and Asia. HSBC laid off staff. They're helping clients transition. Meanwhile, U.S. lawmakers, the chairman of the China Select Committee, John Molinar, sent a subpoena to J.P. Morgan and Bank of America's CEO, Jamie Dimon and Brian Moynihan, over their roles in the $5.25 billion IPO of Chinese battery maker CATL. This company is on the military watch list. The House Select Committee says the banks ignored national security warnings, and they're demanding documents from the CEOs, Kyle. Once again, underwriting our enemy.
Yeah. Look, you mentioned 2 points here, Maria. One on HSBC. There are certain signals that we are following, we as those national security hawks and advisors in the U.S. on China's war preparedness. And HSBC closing up shop in the world's largest economy, fastest growing economy, saying they just want to focus somewhere else. HSBC happens to be one of China's Achilles heels as far as the financial system's concerned. They don't want U.S. business because they want to say that they're not sanctionable over there if and when China invades Taiwan or does something that provokes us to sanction them. So that it's important, let's just say, milestone on the path towards war is the closure of HSBC in America. The second thing you talked about with CATL, look, J.P. Morgan and Bank of America helped the #1 lithium-ion battery maker in the world raise $5 billion for their military modernization expansion. The military is quickly electrifying their combat systems, their unmanned systems, their drones, and all of those use CATL lithium-ion batteries, or private labeled, which is CATL because they're their national champion. We have to stop this, Maria. It has to stop.
Yeah, great points all around. Kyle, great to get your take on this. Thank you, sir. Good to see you.
Thank you.
Kyle Bass joining us. Stay with us. We'll be right back.